This is Kenny Town. Welcome to Real Estate License in 14 Weeks. This is episode 15 of Starting from Zero, chapter 3, Title Burdens and Protection. Today we're going to talk about escrow. If you like my video, please give me a thumbs up, subscribe, hit the bell, and then share this video with your friend. What is an escrow? Escrow is a stakes holder. So exam purposes, remember, an escrow is a stakes holder. That is the key word you have to remember. Escrow is like a neutral, a stakes holder between the buyer and the seller. The buyer will deposit the purchase money into the escrow, and the seller will deposit the grant deed into the escrow. Okay, so that's what an escrow is for. There are two important essentials of a valid escrow. Number one, there should be a binding contract between a buyer and a seller. Typically, in order to open an escrow, you will need a binding contract. In other words, the buyer and the seller has agreed on a contract. They both sign a contract, and then the agent will forward the contract to the escrow. So after the escrow receives the contract from the agent, typically they will send out escrow instructions for both the buyer and the seller to sign. What is an escrow instruction? See, an escrow cannot work without instructions. So everything that you want an escrow to do for you, you put it in the form of an instruction. Because the escrow is experienced in doing this type of things, they don't rely on the buyer's agent or the seller's agent to prepare the escrow instruction. So they typically will prepare the instruction. They have the general instruction and specific instruction. The general instruction are just some typical instructions that you see in an escrow transaction, where there are certain things that pretty much mandatory that the escrow would have to do, and there may be some release of liability by both the buyer and the seller against the escrow. So that's what's contained in the general instruction. So you got a binding contract, and then you got conditional delivery of instruments. That means that the seller at some point would have to deliver the deed and deposit into the escrow. Well, the way it's done typically is that the seller's agent will arrange with the escrow for a notary public to meet with the seller, because the seller needs to have his signature notarized in front of a notary. Sometimes it's done by mobile notary, but sometimes it's done at the escrow's office. Regardless of which way the document is notarized, escrow cannot record the deed without receiving money from the buyer. So in other words, there is a condition for the recording of the grant deed, and the condition is the money has to come from the buyer, and the entire sum of money is in the escrow. Then only the escrow officer has an obligation to record the deed. So that's why we call it conditional delivery of instrument. There's one important point I need to add regarding conditional delivery of instrument. Sometimes there is a conflict between the escrow instruction and the purchase contract. Now, if the escrow instruction is signed after the purchase contract is signed, usually the escrow instruction will govern. Give you an example. Initially, the purchase price that the parties agree on might be $500,000. And then during the escrow, the buyer might have done some physical inspection and realized that it's going to cost a lot of money to fix the property. In that case, the buyer may want to renegotiate the purchase price with the seller. Now, once the purchase price is renegotiated, both parties would have to sign what we call an addendum. And then based on the addendum, sometimes the escrow officer will prepare an escrow instruction. Let's say, for example, in this case, there was a reduction in the purchase price of $20,000. So the new purchase price is now $480,000. So the escrow officer might prepare an escrow instruction that comes after the initial contract was signed. Therefore, the $480,000 is the escrow instruction that is in conflict with the purchase price that was contained in the original contract. Therefore, it is the escrow instruction that governs. Typically, that is the situation. Next, we're going to talk about what is a complete escrow. An escrow is completed when the terms and the instructions are satisfied. In other words, whatever the sellers are obligated to perform, they have fully performed. Whatever the buyers are obligated to perform, they have fully performed. When both sides have fully performed the terms and the instructions, that's when we call a complete escrow. Whenever an escrow is completed, that is the time to close the escrow. Okay, there is a difference between escrow agent and escrow officer. Escrow agent is a corporation. An escrow agent must be a corporation and must be licensed by the Department of Corporation. An escrow officer is a human being versus an escrow agent, which is a corporation. So that's the distinction between the two. So remember, escrow agent must be incorporated and must be licensed by the Department of Corporation. However, there is an exception. A real estate broker who represents a buyer or a seller, usually a seller, an escrow officer can be a real estate broker who represents a seller. Now, that person must either represent the buyer or the seller and is involved in the transaction. In that case, that person who is a real estate broker does not need to be a corporation. So that's one of the exceptions to being a corporation and being licensed by the Department of Corporation. So just remember that exception. Let's talk a little about the responsibilities of an escrow agent. An escrow agent is not an attorney. Therefore, an escrow agent cannot give legal advice. An escrow agent does not accept oral instruction. That's very important. Never give oral instruction, and they will never accept oral instruction. An escrow officer has the legal responsibility to draw up instructions for both parties to sign. An escrow officer also has the responsibility to forward all documents to the lender. An escrow officer has to stay impartial, i.e., they have to remain neutral to both parties. An escrow officer must keep confidential information of either side from each other. Also, an escrow officer must report all taxable transactions to the Internal Revenue Service. All tax-related documents must be forwarded to the Internal Revenue Service. So that's why when you go to the escrow officer's office to sign documents, if you're a seller, one of the documents that they ask you to sign is a tax document because they need to find out if the money that you receive from the buyer is any part of that body taxable. So those documents would have to be forwarded to the IRS. Lastly, an escrow officer has to prepare what is called a closing statement. The buyer will have the buyer's closing statement, and then the seller will have the seller's closing statement. Obviously, the seller's closing statement is going to look very different from the buyer's closing statement. Those statements would have to be given to both the buyer for the buyer's closing statement and the seller for the seller's closing. And both sides would have to approve these closing statements before close of escrow. Next, we're going to talk about debit and credit. Debit means deduction. Credit means giving back the money. Well, typically, the two things that are prorated, two things would have to be considered when an escrow officer prepares a seller's closing statement and a buyer's closing statement. Now, if something is a debit to the seller, then it is a credit to the buyer. If something is a credit to the seller, then it is a debit to the buyer. So it's simple as that. Now, what are some of the things that have to be prorated? What does prorated mean? What it means is sometimes things like property taxes. Let's say, for example, property taxes are due twice a year. As you know, the first installment is due on November 1st, but does not become delinquent until December 10th. The second installment is due on February 1st, but does not become delinquent until April 10. So usually there are 2 dates that I remember, December 10 and April 10. Now let's say, for example, escrow is due to close on January the 4th, okay? Now the first installment is due on the penalty date is December 10. Let's say, for example, to avoid a penalty, the seller pays the installment from pay the first installment on December 10, and that covers from July 1st through December 31st. However, the escrow doesn't close until January the 4th, but the seller has already paid through December 31st. That means that somebody would have to pay for January 1st to January 4th. But since the seller does not deliver the key to the buyer until January 4th, but the seller never paid the property taxes from January 1st through January 4th, so there are 4 days of taxes that the buyer winds up paying, but then the seller still occupied the property. So in other words, the seller got the benefit of staying in the house for 4 extra days, but it is the buyer who pays for the 4 days of property taxes. So in this case, the seller will have to incur a debit on the seller because the buyer already paid. So the buyer's, there'll be a 4 days of property taxes adjustment. They'll be prorated. In other words, there are 4 days of property taxes. That will be a deduction from the seller's closing statement and in favor of a credit to the buyer, because the buyer actually is responsible for the property taxes from January 1st through June 30th. But the seller occupied 4 extra days. So that is a debit to the seller and a credit to the buyer. So that adjustment would have to be made through escrow. So that's an example. So prepaid property taxes, if it's prepaid by the buyer, then it is a credit to the buyer and a debit to the seller. So if it's prepaid property taxes is prepaid by the seller, then it is a credit to the seller, but a debit from the buyer. This is the end of episode 15. See you next time.